form income statements. This is a quick way to visualize margins and what proportion expenses are bringing to a business. So let's just jump right in. I've put together a quick exercise book here. We'll jump over to the cover. I'm going to save this as, we'll put it in our GenInvest folder. All right, now it wants to act funny. All right, and we'll put it in YouTube content. Call it common form income statements. All right, so what I've done here, I pulled in the income statements for Brooks Automation on a quarterly basis, which we're using to model our discounted cash flow. And we'll do the same for Amazon. And I'll leave this as an exercise for you on Amazon, but build out the common form statements for Brooks. So what we'll do is we'll add a sheet. So Shift F11 to add a sheet, Alt HOR to rename that sheet. So we'll call this BRKS common form income statements. Alt WVG to get rid of grid lines. I like to format 2 columns of width 3 and the first row of height 4. Just generally to give me some space to navigate along the sides of my statement. These are all of the line items that we'll be pulling in for Brooks Automation. We're just reorganizing the income statement as a set of ratios of revenue. And that allows us to visualize the business purely on its margins and the proportions that particular expenses are driving in the business. HOI allows you to auto-fit column width. That's what I've done here. It's one of my favorite shortcuts, Alt HOI, auto-fitting column width. Something I use a ton because if you put text in a column, that outpaces the size of the column. You want to be able to quickly fit the column to that text, and Alt HOI lets you do that. We'll go back to the income statements here. We'll pull out the dates that we've added, Alt HOW 12 to change these columns all to the same width 12. And then what we'll do is we'll take down products and services revenue as a percent of total revenue. And we'll call these common form income statements for the quarter ended. Boom. So to start, we'll take products revenue and we'll lock it, this formula, because ultimately pretty much everything here is going to be driven by total revenue, except for maybe the gross margin stuff driven by specific segments. So we'll lock this to this row. Boom. And naturally, these should add up to 100%. We were looking at what percentage of revenue comes from the product segment versus the services segment. Alt HPP to add a border. So now the first part of our common form income statements are complete. Now for cost of revenue for products and services, we should probably be tracking gross margin relative to that operating segment. This is probably going to be the only line where we're not dividing by revenue, but rather specifically the revenue of the segment. So here we're just going to say cost of revenue divided by, so cost of product revenue divided by products revenue. Percent this guy out as well. As we saw in the DCF, these guys have pretty similar gross margins. The gross margin of the services business has really kicked off, which is something that we want to get a feel for, but they've done a really great job expanding their gross margins, particularly on the life sciences side. So we'll take total cost of revenue divided by total revenue. This is the mixed gross margin. Should effectively be the average. there we are. Okay. And just about everything else is just going to be divided by revenue. So here we'll just take gross profit. Divide that by total revenue. So lock it twice to get the column, to get the row locked, just for revenue. Control Shift 5 for me lets this turn all of these inputs into percents, all of these formulas into percents. That's a great tool that Macavicus offers. And then we can really just take this formula and copy it down into our other cells, because we have the same size of income statements here. So column D and row 16 is similarly research and development expense on this sheet. So since the sheets here line up, we can just go ahead and copy these formulas through. Easy enough. We'll unbold these guys. We've got operating income. So we can copy this again. We'll do interest expense and interest income also as a percentage of revenue. So this is just all really simple stuff. Copying this formula down into all of our other line items on the income statement. So what we're doing here is saying what percentage of revenue is research and development expense, selling general administrative expense, restructuring charges, interest expense, interest income, all of the jazz that this business is dealing with, and how do these proportions change over time? That is the mission of the common form income statement. Income before taxes, income tax provision. For the most part, these equity and earnings of equity method investments, as well as NCI, net loss attributable non-controlling interest, these are all rather small pieces. Income from discontinued operations. We don't do the per share data as a portion of revenue. There. Now we can take all of this over. Just copy it to the right. Income from discontinued operations. Oops, something funky happened here. Net income attributable to Brooks Automation. So everything up here to net income is fine. I would expect these income from discontinued operations to be different. Particularly. Oh, I see. Sorry, these are per share numbers. Okay. All of this per share data we can get rid of. In fact, we can just get rid of these per share rows. HDR. Alt HDR lets you get rid of rows quite swiftly. Alt EST, so copy Alt EST lets me paste formatting, and then I'll just drag this over to the right. Boom, and these are our common form income statements. Let me just do some quick formatting adjustments here. Alt HPP to add a border on top here. Net income attributable to Brooks, we'll also bold this. Alt HIR, insert a column, another row, excuse me. HIR, insert another row here. Also bold this guy. And there we are. So these are the common form income statements for Brooks. We can do a quick run through of these statements, see what we can learn from them, and then I'll leave this as an exercise for you to do with Amazon. And yeah, so this is meant just for me to record and throw this on YouTube and Twitch. I see we've got someone here in the room. That's awesome. Good for you for joining in here at 8 a.m. So we'll do a quick run through of the common form income statement here for Brooks, and then I'll pull in the income statements for Amazon on a quarterly basis, and leave this as an exercise for you guys. All right, so let's see what we got here. So we see a services segment that's becoming a greater portion of revenue. The GenInvest acquisition looked like that happened in 2019, so that makes sense here. That becomes a greater portion of revenue. They're expanding their services segment. They sold off their cryogenics business. These are all major things in the last 2 years that will impact the services distribution, or the products distribution that they offer. So between products and services. Total revenue is always 100% because this is effectively the common denominator here on the common form income statement. Cost of revenue, these are our gross margins, or rather the one minus gross margin in each segment. And so we see that gross margin is generally improving. So as cost of revenue declines as a portion of revenue, gross margin is improving as a portion of revenue. And so we see gross margin generally improving in both segments of the business. Here's this really significant, almost 1 year, 9 percentage point improvement in gross margin in the services segment. And the overall margin generally also trending positively, as it should. Both revenue sources are improving margins, so the average margin must also improve. So we see that here, gross profit percentage of revenue. This is really just gross margin. Research and development looks like trending up. R&D expenses that through 2019 back down to 2017 levels. This is probably R&D expenses. Much of this is probably allocated to work going on with their recent acquisitions. Selling general administrative. Generally, we see SG&A growing as a portion of revenue as opposed to 2-3 years ago. Restructuring charges, we didn't necessarily want to model this in, but it feels rather recurring. So getting an understanding of what's in here is important. Obviously not a huge portion of revenue, about half a percentage point, and generally looks like below 0.2% pretty consistently over the last 2 years. But that's just also something good to visualize. How much margin of revenue are these somewhat, what would feel like one-off expenses pulling in. We've got operating income, so this is our operating margin. Interest income, interest expense. So we should expect here interest expense to decline. They paid off a good portion of their debt with the sale of their cryogenics business. Interest expense here declining with the sale of that business, and generally looks like also getting less interest on their cash balance. Here, loss and extinguishment of debt. This is when they started taking that debt off of their balance sheet. Gain on settlement, that was a one-time event. Other expenses net, pretty small effects on the income statement. And this is effectively here, the income tax provision is the percentage of revenue that they're paying in taxes. So this is not effective tax rate. Effective tax rate would be income tax over income before income taxes. This is income tax over revenue. So we're just seeing what margin of revenue our tax is pulling out of the business. They got rid of their minority investment here, which would pull in equity and earnings of equity method investments. So as you see after Q2 2018, that doesn't exist anymore. Discontinued operations from the sale of the cryogenics business. Big effects when they first sold the business. Not as significant anymore. Looks like there's a big number here. Confirm discontinued operations. It's net of tax number here. It's only the net of tax number that we're really interested in, not this line 38, line 39, which is a small portion here. So we can actually, for ease, we'll get rid of this row too. So then net income, this is net margin. And then we also have some NCI. And so this is net income attributable to Brooks Automation. So this is the total net margin of the business here. Let's attributable to Brooks Automation is equal. All right, great. So those are the common form income statements for Brooks. We went through a quick run through of each line item and what we're looking for as those line items change as a portion of revenue. And I'll go and pull in the quarterly income statements for Amazon. I'll show you quickly how I do that, and I won't bore you too much with the process as I'm doing it, but I'll show you how to get it started. So the first thing that we'll do is head over to BAMSEC. Sorry, you guys are hearing my LinkedIn for a second. We'll go to Amazon. We'll grab their latest 10K. Financial statements are in item 8, so we'll head over here to item 8. Click Financial Statements and Supplementary Data. Consolidated Statements of Operations. These are income statements. This is what we're looking for. Click on Similar Tables. This is a premium feature. Just going to log in here real quick. Realize I just forgot to hit record on my phone. Tough. Okay, then we'll head, now that I'm logged in, back down to financial statements, hit similar tables, and we want merge tables. So we want to merge quarterly data from the last 3 years. This looks pretty good. Yep, that's exactly what we want. All right, so hit download. I'll open this up. I'm going to spend a couple minutes reformatting this. And there they are. Okay, great. I hit enable editing. Alt M. Move the sheet where I want to move it. I want to move it to our common form income statements, move it to the end. Don't need to create a copy because I can just physically insert this here. I'm not working in that other workbook. Alt WVG, get rid of grid lines. Again, Alt HIC to create 2 columns. Alt HOW 3, change that column with 3. Alt HIR, Alt HOH 4. And we're just going to want to make this income statement look a little prettier. So we'll do, so they also split into products and services sales. That, HPP. This starts, wow, we pulled in quite, let's make the same period here. March, so we ended Q1 2017. So we'll get rid of these rows, these columns. So we've got, sometimes it pulls in some doubles, yeah. So here, June 30 is doubled up, September is doubled up. We've got December, March, June, June again doubled up. September doubled up. Again, just Alt HDC to get rid of these columns. March, June, June, doubled up. September, doubled up. Is this year ended? Oh, we want to make sure we're staying quarterly also. Should have been more careful there. I got rid of some year ended ones. Alt HOI to autofit those columns. Okay, we want 3 months ended. So we don't want 6 months ended June. We don't want 9 months ended September. We don't want year ended December. So to get to 3 months ended December 31st, we'll do, just copy this date over. And so the year ended December 31st should be just all of its quarters added. So we can sum and remove the last quarter of the year. Naturally, Amazon's cyclical in Q4, especially on product sales. It's the holiday season. We don't need the per share data, so we can get rid of that. Alt HDR. Copy that, and Alt EST for paste special formatting. There, now we have a proxy for Q4 2017. Take this, copy, Alt ESV, copy its value so that it no longer relies on this year-end column, and Alt HTC to get rid of that. 3 months ended, 3 months ended June, 6 months ended June, get rid of that. 3 months ended September, 9 months ended September. Oh, I suppose actually we can just get this quarter here by removing 9 months ended September from December. So we'll take, it's just equal to the year ended December less than 9 months ended September. Again, drop that down, copy formatting, or rather let's just copy these values first, Alt ESV. Alt EST. We'll call this 3 months ended December. So Alt HTC to get rid of these two guys. We don't need them anymore. 3 months, 3 months, 6 months ended June. Get rid of that. 3 months ended September. 9 months ended September. Year ended December. Again, we do the same thing here to get the 3 months ending in December. These are 10Ks, so they're providing those numbers on an annual basis. We want to get these quarterly just so we're looking at apples to apples. Here. So we'll take the year ended December, remove the 9 months ended September. Alt ESV. Get rid of these guys, Alt HTC. This is 3 months ended December, so this is 2019, 12/31, March. Autofit these rows or columns. 6 months ended June, Alt HTC. 3 months ended September, 9 months ended September, and finally for this last quarter of 2020, we'll do our adjustment again for Q4. So we'll take the year ended 2020 less than 9 months ended September 30, 2020. We'll drag those down. Again, paste values, get rid of these columns, Alt HTC. This is year end, or 3 months ended 2020. And we'll do some quick formatting work here. Want to make sure that our numbers are formatted the same way. So notice here, this needs to get updated, as does this final column. Okay, now we call this is 2017, March 31st, 2017. So we'll write an EO month formula off the start date, adding 3 months, that's a quarter. Drag this all the way over to the right. Nothing should change. We're just making this a dynamic formula. We'll get rid of these two columns. We'll add a column here between the date and net product sales. Now we'll do some little color formatting, Alt HH to get into the background color formatting tool. We'll make this our standard GenInvest purple. Alt HFC to change font color. So H for home, FC for font color. Generally, your Alt shortcuts follow the first letters of the word, so it should be pretty easy to memorize as you get comfortable with those shortcuts. And we'll call these common, or rather just income statements. Amazon income statements. Put this over here. call this common. Alt HOR to change the sheet names. We'll call these Amazon income statements. Almost there. Fulfillment, marketing, tech, general administrative, other operating expenses. Alt H6 to indent. Bold, Alt HBP to toss. Border on top. Alt HIR, insert another row here. Other income expense after interest. Total non-operating income expenses. Whatever's net. Some quarters it might be an expense, others income. Also toss the border on top of here, Alt HBP. Income before income taxes. Provision for income taxes. Boom. Okay, great. So your job here, I'll reformat these dates as well. Make them all the same. Row size is to build the common form income statements for Amazon. So you can run from the example that I provided here on the Brooks income statement and just repeat that for Amazon. So I'll do some quick sheet formatting here just to get you started. But if you rewatch this video, you should be able to step-by-step recreate the common form income statements for Amazon. Just run through a check here. That's good. Yep, great. All right, I'll drop my little navigation X's around. So this again is to navigate through the spreadsheet more efficiently so that you can control down through the X's to get the different parts of the income statement. And I'll do some cleanup here. You can hide columns over to the side of your spreadsheet. I like to use Alt HOUC, that actually completely removes the columns. So that way, if you're, for example, here and I hit Control right, I don't get sent all the way to the end of the spreadsheet. We'll call these CF income statements. And cool. All right, guys. So I'll be, for all of you who are subscribed to our investing education tier on Patreon, you'll be receiving this Excel backup so that you can build your common form statements, form income statements for Amazon ended, well, it's actually 3 months ended. Great. And you know what? We'll also announce a free giveaway here with this video. So the first person in our investing education tier or general, if you happen to build this from scratch as well, to send the common form income statements for Amazon into our Discord group, you'll receive a free ticker tee. So those are from public.com. They let you customize a shirt as if with any of your favorite businesses and their tickers. I'm wearing one in previous videos that just says invest. I didn't get too creative with it, but please have more creativity than I do and design that shirt with your favorite tickers. All right, guys, so I'm going to sign off here. I hope this was helpful to those who are here viewing, and I'll put this up on YouTube today. So, yep, have a great start to your week, guys, and I'll see you next time we're live. Bye.